Hey everybody, good morning. Good morning, everybody. Let's see, we've got Goose, Don, Rex, Sergio, Rob, Donald, Dan, Arturo, Mad, Darren, Sinborn, Mark, Frank, Roland, General Rush, Goose, Tom, Gary, Kay, Nikki. Good to see everybody. Good to see everybody. And that was all my channel members. We have lots of others tuning in. Looks like Maurizio, Pauline, Diana, David, Mary, Craig, Larry, Jan, Ed. Good to have everybody. And if you want to chat, say hey, good morning, talk with everybody, ask questions, make comments, whatever it is while I'm live, you can click the button, be a subscriber on the channel. A few seconds later, you can start chatting. And if you like what you see here, I have other content in the background. And you can be a channel member and get access to that content. Just reminding you. And if you want your name to be green or, have the cool buttons and stuff like all the other people, access the dumpster fire emoji, you can be a channel member. All right. So I guess we should start here. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Just because I talked about it, predicted it, said something about it before, doesn't mean it'll come true or it'll ever happen again. And this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything at all. So not stocks, options, bonds, forex, futures, cryptos, treasuries. Don't buy stuff from gurus if you don't trust them. Let's be honest. This industry is full of crap for the most part. People just hyping. You never know what the alternate motivation for a lot of people is. I try to be open and honest, Scout's honor, and just try to help people all the time. And I've had a conversation about this with my copywriter. He's like, you say this, but blah, blah, blah. I was like, dude, it's like one of the core tenets of me. Like, that's just me. Like, I try to help people. And, a lot of people have a difficult time with that because it's all about them, not about helping other people. So if you desire personal financial advice, somebody just to tell you what to freaking push, what button, what to buy, what to sell, what to do, that's not what I'm here to do. All right. I can't do it. All right. I'm not a registered financial advisor. So you need to hire and consult a financial advisor that can give you advice based on your personal financial situation, which is not what I'm doing. All right. So please be careful out there. Please, please, please. Nobody really cares about your money more than you do. I don't care about your money more than you do. I mean, I'll sit here and tell you. I mean, maybe I do a little bit, but you should care about it more than you do. I mean, I'll tell you not to take the big losses and stuff. So pulling this over and looking at this government spending. I kind of teased, let's see, where was it? This one right here. I teased this out to Telegram and Discord and a few other places and asked if we should talk about it. And I kind of already thought we should talk about it. Look at this right here. This is the start. The worst start to a fiscal year for the U.S. government right here. We started out with $624 billion deficit right there. October is the new fiscal year for the United States government. October and November combined, we're already in the hole $624 billion. Doge has got a serious hole to plug. All right, the money's just leaking out the bottom. What does that look like? Well, I mean, look at this. $314 billion deficit right there in October. And a $367 billion deficit right there in November. What the heck is going on? What the heck? Just wild. I guess that's November 23 to November 24 right there. That's year over year. Sorry. I was thinking October to November. That's year over year. So November last year, 314. November this year, 367. Just absolute craziness. Absolute craziness. I mean, I can't fathom those kind of numbers. And here's the outlays. Where does it go? Defense spending, gross interest on national debt. That one's growing quite fast. Social Security outlays. That one's the bigger one, the biggest one right there. Income security spending. That's a weird one, right? Income security spending, 63. And U.S. healthcare spending, 79. So healthcare, a lot of these income security things, that's getting to be these social programs are getting to eat a lot of money. If you look at just just defense spending, that's crazy. But add in all these others, just getting wild here, and that gross interest really ramping up there. So look at it this way: federal government revenue and spending. The green number is the receipts, 6-month moving average, and the red number is the spending. Whew. Getting a little crazy here. Getting a little crazy. That's the deficit right there. Between here and here, that's going into more debt. Just how do we keep it up? This is the problem that's going to get us, I think. And then you look at the cumulative fiscal budget deficit right there. That's that worst start ever as we plummet into the abyss here. Probably going to set new records all the way down through here. Man. This is the ball of wax that could reach out and get us. I mean, even with Doge coming. Now, there's a couple scenarios I've got cooking here. All right. Like, one, Doge happens, right? What's the number one reason we've been growing since summer of 22? They ramped up government spending as soon as GDP turned negative and pulled it back positive. Right? For years and years and years, pretty much my entire life, all I've known a recession to be is 2 consecutive quarters of negative GDP. We had 2 consecutive quarters of negative GDP in the summer of 20. The second quarter was like the end of the second quarter in 22, and guess what? Or maybe it was the third quarter, third quarter, whichever it was. And they said, hey, we're going to change the definition of a recession. That's not like, we're not really in a recession. So they ramped up government spending and turned that GDP back positive, and we just ignored it. If you took government spending out, though, guess what? GDP's still been negative. We still are declining. So that strong everything is all based on government spending. What if Doge cuts out a large chunk of government spending? Well, the whole plan, Rob, is to accelerate other countries into debt faster than we're going into debt. That's the whole house of cards is built on that premise. This is a problem. Maybe this has worked for as long as we've been running this, but maybe the game changes. Maybe somebody takes their ball and goes home. You may be like, well, there's no way with a global economy and blah. I don't know. There's cracks in the armor. Now, here's the other. That was one scenario. What if Doge wrecks this thing? And clean as dirty shirt. That's right. We're all bad, but this is the best bad there is, if you will. And so the other scenario, the system very, very much didn't want Trump to win, right? We kind of all saw that. Elon and Vivek and their whole team gonna cut government spending. That's an empire, right? Like, we've got this empire, we spend it, we control it. What if the system fights back against that happening and does something stupid, lashes out, possibly even before the inauguration or leading up into the inauguration, and cuts an arm off to spite its face, essentially, causes some sort of financial panic, one way or another. I'm not speculating what it is right now. I'm not sure. I'm seeing something in the charts that's got me very concerned. I can't put words to it exactly. Things got me a little on edge a little bit here the last few days, and my head's really spinning about it, trying to figure out what the devil is happening. Something's happening. Talking to lots of smart people, getting lots of input. Something's happening. There's credible threats on this, that, and the other. I mean, this is, there's real deal rumblings going on. That something's brewing. The system's sitting there trying to do something to protect itself. It's kind of like, you back a animal into the corner and it lashes out at you. You take away a lot of people's empires, that they've spent a lifetime building. People aren't going to react very nicely. I mean, when you got nothing to lose, or when you got everything to lose, what are you willing to do? I mean, so I'm not just talking about World War III. Like, we're talking about more local here. We're talking about more centralized to the United States is what I'm looking at. I mean, maybe World War III maybe it's a multi-front, unraveling. I don't know. So, it's definitely something I'm concerned about here, and I'm not going to roll through the inauguration without some sort of protection on. So, for those of you in Termite Trading Labs and maybe my crash protection, I'll be posting more as I figure out what I'm going to do. So, it's like, Goose says, for example, the oil company shrugging off the drill baby drill commentary. I mean, yeah, it's a glut of oil prices that would return if everybody starts drilling and it's like, everybody's approved to drill. But funny enough, the U.S. just had its highest production month ever on oil. That didn't make mainstream media news. We just produced the most oil ever. Yet, Cushing, Oklahoma is at tank bottoms. And oil prices are the way they are. So it's interesting. Everything's kind of interesting. Like, I'm trying to pour the oil in the bowl with the tea leaves and try to read what's happening. And as my copywriter said, well, you're just making guesses. That's the whole name of the game. Like, that, I have to make the best guess I can. Like, nobody's going to tell me what the plan is, right? Just try to read through between the lines, figure it out, color where I can color. I mean, COVID was a guess. Like, when I made $1 million in less than a month, that was a guess. That was a educated, wild, at symbol, $sign guess. And I got it right. Can I get it right again? I mean, I already see it coming. How are we going to do it? How are we going to do it? Open to feedback from the Termite Trading Lab community. You know how to do it. We have a chat for it. So we're putting the wraps on this week. Not a lot really happening here. Not today. Next week, we have some interesting pile of things coming up next week. So Monday, we get that flash manufacturing and services PMI. Hadn't really been a big market mover, but it has been an excuse for bots to react. And then Tuesday, we get retail sales right there in the pre-market. Then Wednesday, we get the FOMC and rate change. It looks like the system wants to get a quarter point. I mean, it's all but guaranteed at this point. It's going to reduce, forecast down to 4.5. It'd be 4.25 to 4.5. Our current rate is 4.5 to 4.75 or whatever. Look at the DGS2 over here. In case you don't know how this works, it's usually a range. It's a quarter point range. Then we're going to pull that range down. Another quarter point, but that gets eerily close. So we'll be down here. That's eerily close to the market rate. Eerily close. They're always chasing the market. Here we're chasing it down. But what if we cross them? I speculated that, gosh, a while back. A year ago, I kind of expected it to cross, but time is always the hardest part. What if they cross and then things get out of hand again? Inflation already kind of squeaking up, and this is the acyclical type inflation, the stuff that you can't really control, you can't affect with interest rates. Already ticking back higher. all these things kind of coming together here. And is it the perfect storm? Let me. I got one more chart to pull up. I forgot. Right here, this one. That acyclical inflation has been rising even with CPI just kind of hovering. So this is. I mean, look, we're up almost a half a point over the last few quarters on acyclical inflation. I mean, maybe it does one of these and we drift back off. I don't know, but history comes back around. Usually we do it in 3 big waves. This one can be in here, and then the doozy can be out here in the future. So, a few things coming together here. Yeah, permacautious. Yeah. Now I'm starting to get a little. I don't know. A few things came together yesterday, and I really got a little like nervous about what might be unfolding here. As always, I can just make my best guess and prepare the best I can, and it's not time to panic, all right? Like, that's certainly not time to panic yet. Now, just, I'll be remiss if I didn't warn about the potentials coming, right? So here's the thing that I see. This was the big high right here. All-time high. That was the low right here. We came up, made this sub-high. Then yesterday did this. Overnight, we came up, hit our head right here, which, funny enough, that's the 618 from this drop over here. But it also happens to line up exactly. Oops, wrong one. Wrong to that one right there. That high and that low. Look at that. Well, that's a perfect darn place to turn down. Well, here we are. And look at this. Look at that. Like, and then bang, 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 bang. Dropped out. Bang again and dropping out. Might be indicating we're going further down. It's getting a little, volatility is increasing, and it's not just VIX type of volatility. This is, look at these swings. These swings are increasing in frequency. That's a volatility expansion. VIX won't respond. Just VIX is kind of broken. It only responds when we go down. It won't respond if there's positive volatility. So it's one of those things right here. I would have an alert here. And if we break it, we're probably coming down to here. You could do this even. If you want a little more aggressive type alert, go like this. Put your low here. Bring it up like this. Right off the low. Below the low. You could do the 2-point ray or whatever they have in here. And then add an alert on the trend line. Price crossing trend line. Give me an alert. If I could spell. Now you have an alert. That's how you would do it. All right. Draw a trend line, add an alert to it. Price breaks it. You get an alert right there. Or out here, wherever it might be, wherever it breaks down. And then the target's down here. More than likely. All right, you can set a secondary on the break below that. Always could come down, save the day, and go higher. That's always a possibility. Right there. Been more into the price action lately because it's got my attention lately. Something's up. I can't exactly put a finger on it, but when we look at this one, that's 5 TW, stocks above their 20-day, right? It's just a giant market oscillator. We're down here where we've reversed before, but we're sitting at with price right up near the all-time high. Not even that far off the highs. This might need a dip into the bottom. S5 FI, stocks above their 50-day moving average. This is broken down below the trend line, getting ready to come test this low right here and might go visit the bottom finally. Kind of been on this uptrend of lows, and then we started softening it up, and now we're potentially going to rip this on down further. But with the S&P sitting near all-time highs, that means the participation rate is narrowing. We're going higher on fewer and fewer and fewer stocks. This is below 50% participation on stocks above their 50-day moving average. Then S5TW, this one's just still hanging near the top here. We've been here before, and we've gone back near the top. To me, if this starts getting below these lows that we've kind of held for over a year now, this might be indicative of a bigger retrace. So these are stocks above the 200-day. So we're at 66% above their 200-day. If this bleeds on off, though, I mean, look how fast this went. Right, we were up here at 76 just a few days ago. Now we're down at 66. This could bleed off pretty quickly. What does that do in the market? It means you got to be very... What this means is you got to be very selective about where you are in the markets. All right, you can't just be buying everything. So be careful. Be careful. NASDAQ, a little bit different chart here. That one blasted right on through. See, we didn't, while S&P is respecting that 618, and this was the big pullback. Well, I guess this was the big pullback and the expansion to higher prices. This is the next sub pullback and expansion to a higher price. Right there, came up just shy of that target. This is our exceptional, like if you want to call NASDAQ anything, it's the exceptional index, right? Like it tends to be up most of the time. Like out of the last 15 years, it's been down like one time year over the year. You know, S&P is closer to like 60-40. Russell, on the other hand, much more chaotic. This is our small caps. This is where most of America works. And yesterday on that breakdown, I added some downside, looking for this to go back to the roadmap line. For those of you in Termite Trading Lab, you should be able to access that information in the trades channel for Termite Trading Lab. And I'm thinking we're going to take a trip all the way back down here, somewhere in this vicinity. Now, it doesn't mean we won't bounce over here and it take a while to get there, but right now, this is looking like we're going to take a trip. Slightly supported by ES, possibly getting a bigger flush. Now, look, this is what's crazy. Look at here's the 4 hour, right? And we've actually pulled it up even more in the last couple sessions. There's the 4 hour. That's very high up there compared to the daily. Look at the difference in that. 6%. I mean, we're 300 points difference between the daily and the 4 hour. 4 hour. I mean, this is we're definitely stretched at this point, is what I would call this. We're stretched and needing a deeper correction. So this could come into play down here. This roadmap line area right in here could come into play. My rhetoric about being careful has increased. If you have noticed, I am a little bit concerned about what might potentially come. I was excited by that pop, and then I'm not by this drop, especially since we're coming back down through this uptrend of lows potentially, and that may take us down further. Where might that go to? Let's take a look here. Big picture. It's going to take several days. You know, this took a number of days. This took a number of days. This one could go fast, but it could take a number of days again. Usually it goes faster than the first move, right? This was kind of a 3-wave down. Usually the third move goes faster than the first move, but not always. Like that's just kind of a rule of thumb, not really a hard, fast rule. So if it goes faster, we could bottom out somewhere before the end of the month. And it may go down deeper than could come down in this area right here. It's one to watch out for. That looks a lot like 1, 2, 3 right there. Very classic for the second move. First move, second move, third move right there. Looking at silver, that's having a very strong negative reaction and might be heading right down here. Look at that. I drew that little thing a couple days before that little tail popped up there. Bitcoin, on the other hand, still grinding the highs. Grinding. Keeps getting, for lack of a better term, it looks like shorts keep attacking, like defending a breakout. I think once it breaks, you know, everybody, it's commonly reported there's $5 billion of shorts sitting at 100,000, but just doing these little poke throughs doesn't liquidate shorts. We're going to need some sort of power move through where all of a sudden they're like, oh, sugar honey iced tea. I'm thinking a move up through this kind of area right here is probably what it's going to take. Because that's about a 12 to 20%. Like, what kind of uh-oh are they willing to hold? We rip it right up in that zone, about maybe even tighter, 15 to 20,000. I think we're going to see a lot of liquidation of shorts. And that could go really fast, and this could, you know, push that on up near the targets very quickly. So I am cautious here that the entire crypto run could shake out faster. We could be done earlier in the cycle than I even expect. This happened before we even got to halving. It really shouldn't have happened until over here, if it was based on history. But we've got some different dynamics playing out with the ETFs and stuff that got approved here. So we could be much earlier. I mean, we could be further down the cycle than we've ever been at this point post halving. We could do the finality move quite a bit early. So always looking at where I might be wrong, all right? Like, be prepared. You know, this is pulling ahead almost 6 months. So I was expecting the end. I was already expecting the end possibly by October of next year, right around here. But what if that is pulled forward 6 months? Beginning of October, pull forward 6 months. So we could be looking at a potential to finish this baby up somewhere in this narrow, tight range right here. And then crypto winter starts. Cautious, right? Like that's the kind of stuff I sit here and go through all the time. Like what, where, how could I be wrong? Like where might my prediction break down? So right now that's kind of, think we could see a spike up in here. Potentially a crazy fast spike. Everybody thinking we're going to be rich. And then it's game over. So where does that come in? It comes in roughly. Look at the date. This is getting weird. Look at that date. I did dump all my short-term silver stuff. So, did I take a short? No, I didn't take a short on silver. Right there. Everybody see that date in the black? That's inauguration week. Too many coincidences coming together. I didn't even, that was the first time I saw that. Like, I just pulled that up. So Ethereum has not been able to break the March high so far. We poked up into it, but we didn't break it. Go for a second attempt, try to get above. Then we got next resistance, the all-time high. And then if we can go for the target, right up here around, pull this down, right up here, 5,500, 6,000, possibly 7,300 if we get really spicy. I don't know, Sledge, man. Like this, there's too many weird coincidences coming together. Something's brewing. I don't know. I don't know what it is. Something's brewing. Dollar up into that resistance zone I drew on the chart. I don't know, man. If we can get above this, we're going on higher. Right there. If we turn down, back to this zone is what we're probably going to do. First move, second move, probably third move. This is the higher likelihood move, but it can do whatever it wants to, and it can go like this correction could have been all it was, and we're going on higher. So there's your upside, and there's your downside. NKD. Look at that. I actually like that fact that it's done that so far today. That was a potential breakout of the downtrend of highs. Nice retest. If we can turn this back green, that would be an indication, an early indication we might bust out of this box. If we get above the box, highly likely we're going to push this on up to 44,000 and take the indexes with it. And this may be this is a global, to me, it's a global liquidity indicator right here. This is the Japanese market futures. Right up in that zone, if we can break out. Now, if we break down, if this doesn't just stay rejected off of breaking lower, and it does actually break down, we're going for a bigger correction. All right. Global liquidity, if this climbs, global liquidity is increasing. Probably see the US markets go up. This breaks down, we'll probably see global liquidity decrease, and the US markets will probably go down. It's like global liquidity is the only thing that's like 98% correlated to the S&P and has been for years and years. So I'm keeping an eye on this one. I usually only check on it once a day. All right. Nice breakouts. Broke through that high, up in clear air. Now the thing to watch is, does it just drop back down and come back? Or can it stay above that, retest it, and bounce? That's the key level. Breakout. Can it hold above it and get the extension? Or do we break back down? AVGO. Now, if you're new here, you're like, where does this list even come from? I go in the pre-market, run a little tool I got that goes and pulls everything moving $2 or more. Oh, look at that. Right up through the target, and boom, extension target. I've been saying that was going to 193, 194 for weeks and weeks and weeks and weeks and weeks, and there it goes all the way up there. So if you rode that one up there, congratulations. Protect your profit. Don't let it come back down through. Nice. That was really nice. This setup all the way back here. All the way back there. In like August. Retrace deep. Came up. Retrace deep again. And then boom. Right up to the target. Even beyond the target. Like that was just the target right there. Right there is the target. But we got even better than the target. Did I trade it? No, I didn't trade that one. FNGU. Pushing extremes. Bulls. This one may actually perform. I'll be dang. 215 on the upside here. Looks like I have 2 fib lines on there. I'm looking for that final little push right up there. If all these leverage things start hitting their targets, watch out. That could be the end of any kind of uptrend. ASML. Still think this is going to flush to the bottom. Here's the resistance right here. We may go test it again like we did right over here. See how we negatively reacted off of that? We may come up here again and negatively react right down to the bottom of the box. Kind of what I expect right there. This is kind of an indicator, right? Different way, different thing, whole different kind of way to look at things. Do you know what these people do? They make chip fabs. All right. If business is not going so well in the chip fab selling business, which that was a downtrend, kind of topped out right here. And we've been severely declining. If this starts breaking down further, it's indicative that there is serious issues going on in semiconductor space. Like, you can't make semiconductors, you can't expand your lines and expand your production without buying chip fabs. You can't make the new fastest, hottest thing without chip fabs. These guys make chip fabs. This chart indicating the chip fab selling business struggling a little bit. Dun, 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 dun. Marvell chips. Look at that baby go. Little birdie told me that this was kind of a play on Tesla's AI. Have some Marvell chips on their AI boards. Another one. Potential that's not ramping off, popping off. Use Micron technology memory chips, DRAM, on their AI boards. This one not really performing. Opportunity for it to catch up, potentially. Has a measured bounce in place. That upside could be a double. Could be a triple or quadruple here. If it got really spicy. Interesting. So watch for that one to start moving. Could buy a small starter position now if you believed in that narrative. Watch out, and I'd probably liquidate it below 83. Maybe even below 80. It's interesting. AVL. That's a AVGO leverage right there. Hadn't been around very long. Chip fab. You gotta have. Yeah, you gotta like. I'm a very knowledgeable person. As one person put it the other day, I have a strong affinity to just find out information about things. So chip fabrication equipment, basically. So that's as in semiconductor fabrication equipment, chip fab. That's what ASML does. They produce the equipment that it takes to make chips, semiconductors. You know, all the little things that are in these babies, right there. AVGX. There's another. It's two of them. Two different ones right there. Oh, let's show this off. I found this tool this morning. I thought it was pretty cool. I just want to show it off real quick. And let's see, Control T. Let's go to. I mean, I know this is out there, right? Like, but check this out right here. You can come in here, and if you ever want the list, you're like, what are the ETFs that are Bitcoin? Check it out. There's the list. What are the ETFs that are on Ethereum? Well, here's the list. What are the ETFs for? There's all your things. Germany, Japan, United Kingdom, fixed income, gold. Look at all the gold ETFs. That's a bunch. Now, one of the interesting things, I was messing around and I came across this. Leveraged right there. You find all your leveraged ETFs right there. And you can do further different things with this list. So this is an interesting screener. You can create your own screens. Clicking that button right there. So that is, you go back to trading view on the default tab, click markets, and come down here. You can dig through all sorts of lists. Pretty cool. I just thought I'd show that off real quick. Thought it was an interesting addition to the toolbox. CRM, I don't usually. I have a subscription to TradingView, but I probably only use 10% of the capabilities. There's a ton more buttons in there. I don't ever click them. I'm so busy just watching the stuff I watch with the tools I use to find it. This one has been an absolute rocket ship of a go so far. I'm probably going to come on up here, right there. And the upside getting to be a little less, maybe 60, 70 bucks left on the upside. On the potential. Turned out to be a heck of a pretty good deal right there. That almost getting close to what might be a double. MSTR, still chopping around. Still has me a little concerned here. I'm actually going to set an alert on this at this point. Set an alert on the top trend line and the bottom trend line. This is, I'm concerned about here primarily because this looks a lot like the bubble pattern. Now, if we break above the top, probably going on up to those higher targets. If we break out of the bottom of this thing, though, the party's probably over for MSTR on this cycle for now. And especially if we're on that accelerated 6-month broad ahead curve for Bitcoin, like the couple things just coming together, clicking in my head a little bit. I'm like, what if the party ends early? What if the party ends early? If you haven't seen the bubble pattern before, you're new here, check this out right here. You can Google this, Psychology of Market Cycle. This is not my chart. There's like 9 gazillion examples of this. It goes up, we get this consolidation here, and then things roll down. And you should keep this in mind anytime you see one of these going exponential. If it starts consolidating over here in this manner, we tend to break back down in a violent way at some point in the future. And a really good example of this right there. Just a recent, really good example. Crushed a lot of people right there. And I think we possibly have further downside to go. We'll see. TSM. And that looks like it could go for an extension there. 218, 220 upside. Haven't been down to the roadmap line since back here in August. That doesn't mean anything. We can still extend it. Go for higher targets, higher targets, higher targets. And turn down. SMH. That one just keeps churning here. We set up a potential for this to pop up into this area right here. Triggered it right back here, went on a deep retrace, retested the roadmap line. Now we're popping up again, setting up a second entry. Still looks like that would be the target, and it's inside the bigger pattern. Potentially we would activate the bigger pattern to push on out to 296, but it could just stop at 265 right there. We do have this nice big fat gap down over here. That's resistance that we would just tap into the bottom to if we made that work, and then we could roll over. So caution on that one. Semiconductors are feeling a little played out. I don't know, like this SOXX, this one indicating softness. We're just down here messing around on the roadmap line. SOXL leveraged is really soft. Something's up here. This one not really participating at all. And if you look at it, like connect those, if you connect these two up right here, we broke down, we're back testing. That's usually indicative of a flush. Is it the tea leaves showing up in the leverage, or is this one just struggling? I don't know. That's the thing you never know for sure. Like, is it the one that's telling you what's about to happen, or is it the one that's just underperforming and it has giant opportunity to catch up? Because to catch up, this would go from 30 up here to 80. Rock and roll, baby. That'd be almost a 300. 90 would be like a 300% upside. But it sure is close to indicating we're flushing. That'd be cut in half right there. I don't know. Hard to tell. Arm, still chopping. We've got that resistance that we rejected back here in, gosh, what was that, October? Rejected that. Flush back down, sat on the roadmap line. Probably going to come up and test it again. If we get above it, upside. If we don't, we have a date with coming down here eventually. So there's that resistance off that October high. Get above that. We're probably going to extend it on up. Maybe 210. If we don't, and it could be a fake out, so you got to watch out. Like, we could just spike it and say, oops, that was it. USD, another semiconductor ETF. All of these kind of indicating weakness in this semiconductor space. They all have a different mix of how they put together the different semiconductor companies, different exposure levels, and they are all suggesting there's trouble brewing. This is another leveraged one. UPST, really struggling to try to hold on to that breakout right there. I think if we get above that, we're probably set up to see some bigger upside. I clicked the wrong fib tool. That low, that high, that low, right there. Potential to come up in here, and it still be just a correction off the lows, and we could go lower. But if we get up to this level, up here, that might kick off a bigger upside for upstart. Maybe like 80 to 400. That's huge. Yeah, it's already a big move potential. So get above here. I'd watch out for a move to here. And if we push on through, that may back test and go up even bigger. So it's not all like horrible, nasty charts. I mean, there are some potential opportunities in here. And can some of these buck the trend? Even if we went through a bigger downtrend in the markets, yeah, everything's possible. ANET breaking out, going on the next extension, possibly up to 120. COHR, that's sitting there at those kind of highs and struggling to go any higher. Watch out for the retrace, but the next upside would be 140. ALAB, can't really do much projection off of that, just one big rip off the lows. NVDU, indicating big problems in Little Chinatown. This did have a giant dividend payment yesterday that sucked it down 13 bucks. Just throwing that out there. Dividends do come out of the share price. TECL. It's in sort of an uptrend. Has opportunity to pop and get on up to this 125 area. DEO. We are at the roadmap line. Got to watch for the reaction. Can we get through, back test, and go higher? Or do we respect it, turn down, and break down? Don't know. No high probability setup. W, Wayfair, never has what I need. Is still kind of sideways chop. Tried to break down, back into the wedge. Resistance at the downtrend of highs. CLS, potential to break out. Yeah. Speaking of that, I closed that tab over here, but look at this right here. Let's see. Markets. Back to ETFs. Overview. When you click on, what the heck? Where'd they go? Click on leveraged right here. Look what pops to the top. We got NAV return on that baby. Holy smokes. You kidding me right now? 1,700% NAV return. And Meta has 1,000% NAV return. And then NVIDIA probably sitting there somewhere. Yeah, right there. 300% NAV return. Just some wild numbers right there. I've been paying attention more and more to these. You can just hold the shares and get these ridiculous returns on some of these. Next upside, if we're rocking and rolling, and there's the downside risk right there. So a little bit upside versus downside risk. You got to take in consideration where you're at. If you're on it, VRT sure does look like we might roll back down. Like this is kind of... Now, if we hold the breakout zone here, we can hold that. We can go up for the next fib line, 150. If we start breaking down through it, we could come back to the roadmap line. And these two could meet out here together here and then go higher. So anything's possible. No high probability, anything at the moment for me. PTIR, I've talked this one to death the last few weeks. There's kind of the upside versus the downside risk on this ticker. It's all based on PLTR's potential upside versus the downside risk. Remember, leverage cuts both ways. That's why the downside risk is giant for PTIR. And CRDO, just grinding highs. Next one up here at dollar 117, 120 area. MSTU. Leveraged MSTR, potential upside there versus going all the way back to the bottom. If MSTR retraces to the roadmap line, if it breaks down, yeah, I talked about that. We break down. Look at that. Leverage cuts both ways, right? Maybe 40% down, 2x that. That's 80% down. That's nasty when we get to MSTX and MSTU. 80% down. That's nasty. Oh, man. 19. Ooh. That would be gnarly. MSTU, 80% down. That would be gnarly. 29. DHR. Still looks like that one wants to drop out. MU, talked about that a minute ago, is a potential, but it's just sitting under the roadmap line. It's under the roadmap line. Like, that's not bullish yet. You could buy in a hope and a dream with your stop down here. It may retrace again. All right, be careful. VST, Vistra Corp at Looks like we're reaching extensions, and we may play out here. We might go for that 189. Back tested the fib line there. We tend to climb these fib ladders. But it also sometime is going to come back down to the roadmap line for a revisit. Does it happen here? Does it happen here? Does it happen here? Never know. Gets more and more likely we're going to do it the higher we go. CEG, that's getting close to the roadmap line. XLK, upside 246 right there. That fired off all the way back over here in August. We're almost there. I'm sorry if you can hear the person cutting concrete in the parking lot, apparently. NVDO, sitting right there just above the roadmap line. If we get below it, can be indicative of going down here for a bigger correction. NVIDIA, same situation. If we get below the daily roadmap line, indicative we're going down bigger. That's support, and we keep hitting resistance. Next one up, 158, if you wanted to go for an upside target. TQQQ. Oh man, look at that. Almost to 92. I bailed on this. I didn't have much time left. I bailed on it last week. When it popped up in here. Almost don't believe it. We're about to hit the target. That one was an entry all the way back here. We got 94% of the time we do this, and oh, it says we hit the target right there. Got it this morning. Right there it was. Boom. Beautiful. Worked. So that trade's over. If you're in it, time to book it. You can hold it. I mean, you could hold it if you wanted to, but the upside, nothing's guaranteed at this point. We hit the target, and that's it. Like, that was it. Game over, baby. All right. Yang. Nasty chart. Not for me. SPXL, next extension, 198, but this also may come back to the roadmap line. So you've got this upside and that potential downside. Elf Beauty, still not breaking above. Still not holding. This might be indicative of a bigger retrace. Back to the bottom. I have not gotten any position. I talk about it all the time, but I just can't pull the trigger on it. Can't do it. Can't do it. QLD. There's another Ultra. QQQ. Next upside, 121. 139 above that. That's at the extension. Dell. So all these leverage ones we were watching, they're all hitting their target. That's time to start being careful. Really start being careful. That's the warning sign right there. Dell rejected that target. Look at that. Beautiful. I thought we'd rally to the 618 and then watch out. We came back to the roadmap line, holding here, breaking back up through here. Bullish for going on up. But if we experience some weakness, coming back down to the bottom and possibly extending down to 64 is a reality also. SOXL, kind of already talked about that being weak and maybe suggestive we're going on down to 14 area. If we get below that prior low, really indicating we're coming on down to that 14 area. Reddit just keeps rocking and rolling. It's like a beast. When this one gives up, it's going to be rough. Next target up would be 264. All right, stuff that was down in the pre-market. Now, probably going to retrace at some point. That is a ridiculous upside move. It's got a lot to give up. AVS. Not even enough candles to talk about. ADI. Weakness. Might go deeper. There's a support zone. There's another one. There's another one. And look at the fib lines. Yeah, it kind of lines up with that one. Imagine that. It's kind of funny. Right there. That might be where we break down to if we start flushing bigger. So I'd watch out if we break down below that low. That might be the target right there at 185. CADL, Candel Therapeutics. This is biotech stuff. Just don't mess with it. That's my best advice. Just don't mess with biotech. There's plenty of other opportunity. Don't need to mess with it. If that's your specialty, great. Good on you. My patterns don't always work on biotech. This is very weak and might be suggesting we're going to see a lower low. This is Temu. Seeing all the ads for the internet garbage, you know, like the China garbage you can buy on all the ads. Temu, super cheap stuff. That's Temu. And we might see this flush on down if we break down further. TXN, that certainly looks like it's coming on down. RBRK, Rubric, not enough candles to have a roadmap on or project anything. Sorry, if you're long it, great. Be careful. It'll probably give up eventually. It's kind of going exponential here. What goes up, straight up, usually comes down in a violent way. TTAN, 1 candle, 2 candles, I can't really do anything with that. Didn't have any bonus trades that were worth talking about. There were some stuff show up, but it has a historical losing history, so no point in talking about that. ES is kind of turning, potentially turning here, so let's see. Let's talk about the bias for the day. Cool, thank you. Well, not looking great so far. That's what I would say. That low, that high. There's the 618 right there. If we hold it, we might come up. So that's the thing to watch here, if we can turn it. So you would run another fib line. Like, how do you do this? You just got to keep watching, right? There's the potential support right there. There's the uptrend of lows right there. So we've got this high. We've got this low. If we break back above, look at that. Happens to be right where the roadmap line is in the 618 for the 30-minute. Break above that zone. Might be indicative we're going higher again. But then there's the resistance, and that could lead to a turn down. So this is still support on this uptrend of lows. And we're still a little bit downward bias on the S&P. Till we can start breaking highs and getting away from this. But that's still, like, we're kind of in a topping process is what it looks like to me. Like nominal higher high, nominal higher high. We're just kind of churning a little bit before we get a bigger flush is what it really feels like to me. NQ, look at that, push to higher high. So NQ is doing it, but S&P is struggling, and Russell is flushing. It's kind of the name of the game. Something's up. Something's up. When the indexes are doing different, go 2 different directions, something's up. So be careful out there. Be careful out there. All right. I'll be back again Monday morning, 9:15. We'll talk about it all over again, see what's moving, see where the opportunities are, and come hang out. If you don't have the roadmap line, links in the description. If you don't want to spend any money on it, cool. Click the channel logo right below me over here. Go to the homepage. Pinned to the channel is the market roadmap. It'll give you the code and everything. If you're a DIYer, you can get the code and the pattern and everything for free and start applying it yourself. Good luck out there. See you again on Monday. Be safe. They count you safe.